What in the world is going on with Robinhood? They have had some recent press releases coming out. They've been in the news for reasons that they should not be. And I have some legitimate concerns. A lot of people have some legitimate concerns on what is going on. So for those that are new to the channel, I have a Robinhood account. I have spoken very highly of Robinhood. I love the fact that you can start investing on their app or on the desktop with ease. I mean, it's simple to open an account, get invested, start buying stocks, and you can do so in less than 5 minutes. And I love that. For all those that have, issues or have some lame excuse not investing, Robinhood is one of those investment apps that removes any of those barriers, any of those obstacles. Nonetheless, though, I mean, there's been some things going on that are making a lot of people feel very concerned. And so just for those, just to be 100 transparent, I am a Robinhood client. I have my investment account right here. This is my account. Currently have just over $200,000 with them. So it's not like I've got a small $500 account. I've got over 200,000 in there. And just recently, so why this all started was, for me, I got an email just a few days ago, and I read over the email. Initially, I just kind of glanced over it, and it didn't seem like a big deal. But then I read it again, and I thought, wait a second, what? Because the way that this email was composed, it didn't really, it just kind of glossed over what a big deal this was. So here was the email that I received from Robinhood. And here, hey, we just wanted to let you know, just like a good old friend, you're just gonna let me know that starting on January 11th, you'll no longer be able to buy closed-end funds, limited partnerships, master limited partnerships, royalty trust, tracking stocks, New York registry shares, and units on Robinhood. Please note that you'll still be able to sell what you own at any time. And it gives this really lame excuse as to why this is happening. We're currently in the process of phasing out certain types of securities on Robinhood. And they just basically repeat themselves. Okay. So I've learned. So I was watching a video by Joseph Hogue. You should also check out his channel. He just did a video on this, I think just a couple days ago. I'll have a link in the description to check out. So he didn't get this email, and I think it's because he'd already moved a lot of his investments off of Robinhood. Now, the reason that I got this email, as I learned from his video, is that I purchased a closed-end fund called the Gabelli Equity Trust, and I mentioned this closed-end fund in a previous passive income video, and you can check that video out. I'll have a link in the description so you can check that out. But so I purchased this. Now, I'm not a big closed-end fund advocate. I bought this one because it paid a dividend and it was currently trending on a downward price. So I thought it was a decent time. I didn't pick up a huge position. I think right now I put $5,000 in, and looks like I got a little bit of a gain. So $5,000, and right now it's currently worth $5,900. Woohoo! So I'm up $900 there. So anyway, So for many, maybe closed-end funds aren't a big deal, but for the master limited partnerships, I mean, for those that are seeking dividends, that is a big deal, because you're typically looking at stocks that are paying 9, 10, 11%, usually in that double-digit dividend return. And maybe you don't see that as a big deal because, I don't buy those. I really don't care. Doesn't really affect me. But if you do have a Robinhood account, this is why I think you at least want to be concerned about what is going on and what, why these changes are happening. And because, listen, Robinhood, they have positioned themselves as a disruptor in the financial services industry, commission-free trading, and they really gamified the app so that it made it really easy to invest. Well, they've been raising a lot of money. And here is an example. I think this is back in August, I believe. And they raised another $200 million for a valuation of $11.2 billion. So they're planning on going public like that. That is, I'm sure, the end result. This says this year alone, California, they've raised 800 million in funds for the entire, just for 2020 alone. So they're going to go public. Their valuation is 11.2 billion. So then the question is, why are they getting rid of some of the offerings that other, not just online brokerages are offering, but like all of the big hitters? You got the TD Ameritrades and the Schwabs and all of the Fidelity. You can buy closed-end funds, you can buy limited partnerships. There are no limitations on what you can buy. So why is Robinhood, and when they've raised so much money, why are they getting rid of these types of securities? And just the way they went about it was just really odd. It was just like, by the way. But this isn't the first time that Robinhood has got into trouble. Earlier this year, they really took got a lot of bad press. I think this article originally appeared in Forbes, but talked about this young man, 20 years old, and he committed suicide. And the reason he committed suicide was because he was trading options in his Robinhood account, and on his app, it showed that he had lost, like he was down like $730,000. And I can't remember exactly how much he had invested. It wasn't that much, but he really wasn't down that much. It was because that the options didn't have time to settle, so it was just showing a potential loss, but it even wasn't a real loss. If they would have waited till the next business day, it would have shown this. If you want to learn more about this, I actually did a video, talking about what happened and what the big misunderstanding here was. And that's really what it was. It was a big misunderstanding and a lot of people were angry at Robinhood because the way that the information appeared on the app, it did look like he was down, but had it just waited till the next business day, the other options that he also had would have basically canceled it out, showing that I don't know if he was up or down, but it definitely wasn't down $730,000. So that was one of the big issues that happened with Robinhood earlier. And then, well, did I mention that now? Yeah, I guess we could say this, but they also are losing some market share. There's another company, Public, I think it's called. I'm not really familiar with them, but another company that I think many people are familiar with, because if you're on YouTube watching any investment videos, you hear a lot about Webull. And initially I dismissed Webull because I'm like, you got Robinhood and M1 Finance and all these others. But man, you gotta also figure, I don't wanna misquote this, but I'm pretty sure one of the founders or one of the big investors into Webull is, the dude, Jack Ma, who's in Alibaba. And there's a lot of money, and like they are putting a lot of money, banking a lot of stakes that Webull is going to come out competing. And Robinhood has lost thousands of clients, of traders, over to Webull. Now, is that something that's going to stick? We don't know. One of the reasons why, Webull just adopted a similar strategy, a similar marketing strategy that Robinhood was doing, offering free stock. So you sign up for an account, get some free stock. And right now they do have this promotion that you can take advantage of. I'll have a link in the description. Also check out the first comment, where right now, if you open an account at Webull, if you open an account, you get 2 free stocks. If you deposit $100, you get 2 more free stock. And total value potentially is up to $3,700. Now, I will say, I have got some free stock from Webull. I've not got anything over $100 yet. So, they do say here, I'll just read you the text. Each valued between $800 to $1,600. I think the largest stock that I've received so far is about $30. So just keep that in mind. I did get my 4 free stock, but definitely wasn't $3,700, even though that is kind of what the marketing is going. But Webull is making a really big push. Not to mention the fact that Robinhood, if you look at their platform, and right now this is the desktop platform, which at first glance it's really clean, a lot of white space. But when you compare it to other platforms that are really into trading, looking at trend analysis and looking at charts and all that stuff, Robinhood is really lacking in that. They made it really simple to get investing, but they made it almost too easy. And is the right education there where people can know what they're doing, especially when we're talking about a lot of money, and then you look at what happened to the 20-year-old that committed suicide as well. So that is, just one of the knocks against them. But, the other, and this just happened, I believe it just came out today. So Robinhood, they, what do you call it, pleading no contest. They agreed to pay $65 million to settle an SEC probe over misleading communications with customers. And it goes on to say, I'm actually going to read the press release, and I'll have a link to all these articles if you want to check them out. So this was the press release on the SEC's website. Let me make this a little bit bigger. I don't want to read the whole thing, but I'll read, let's see. Despite, at the SEC's order finds, one of Robinhood's selling points to customers was that trading was commission-free, which is like, hey, you could buy any stocks, no commissions. But due in large part to its unusually high payment for order flow rates, Robinhood customers' orders were executed at prices that were inferior to other brokers' prices. Despite this, according to the SEC's order, Robinhood falsely claimed in a website FAQ between October 18 and June 2019 that its execution quality matched or beat that of its competitors. The order finds that Robinhood provided inferior trade prices that in aggregate deprived customers of $34.1 million, even after taking into account the savings from not paying a commission. So that is a mouthful. So basically what is going on here, right? Robinhood is marketing zero commissions, free trades. So you open an account and you start making trades, start buying stock in your Robinhood account. You're like, oh, look at me. I'm getting free trades. I don't pay a commission. But essentially what's happening here is that, let's say that you want to buy a stock and it's currently trading at $15 and you put a market order in, meaning that you don't actually set a specific price on what you're going to pay for that stock. So you put a market order in, it's going to execute at whatever the best market price is. And we're talking like, these are like, you're talking about fractional shares. I mean, these are like fractions. Have you ever seen the movie, is it Office Space? Office Space, with the red stapler? I've got a red stapler. Where they're siphoning off like just these pennies, ends up becoming like millions of dollars. Essentially though, is that you think that you're paying what is like the best price for that stock, but in truth, you might be paying, $15, like 1 cent more than you should be paying, or a couple cents more, which might not sound like a big deal, but when we're talking about a lot of trades at a high volume, that is where people aren't getting the best price. So yeah, you might, and maybe that example isn't the best example, but I think you get the idea. And maybe it's a larger amount instead of $15. Maybe it's like you're paying $15.25. I don't think it's that much, because I definitely think the SEC would catch on to that even more. But they caught on to something enough where Robinhood agreed to pay, once again, $65 million. They didn't even say, they didn't try to fight it, they didn't try to argue it. They just said, yep, we're not gonna plead guilty, but we're just gonna go ahead and pay the $65 million. So you got the fact that, they've already had some issues this year, with the suicide thing, the 20-year-old. I mean, it's a tragic story, especially when, obviously there might have been some more going on, but the fact that he wasn't even down, like he didn't even lose any money. But that's what the app showed. And like, I tell you what, if I would have, even though I have a decent understanding, how investing works, I don't do a lot of options, but if I would have opened my account and saw I was down $730, like I would have had to freak out myself. I'm not saying I would have killed myself, but I would have been very, very, very stressed. And I think you can also agree with that. So you got that. You got the fact that, this weird email, and this was on their website. You can look at the FAQ. It says investments you can make on Robinhood. And it's just so like, well, okay, here's what we have, and here's now what we don't do. And I mean, you compare like the 3 bullet point item of what they do versus all the ones now that they don't do. And you just compare that to all the other big hitters out there. I'm trying to figure out, they've raised so much money. You have a company that is now valued at 11 billion, but yet you don't even offer what everybody else offers. So, okay, Just have some concerns about what is going on, why, why this is going on. I'm not ready to close my account yet, but definitely I'm looking at why I have so much with them. Now, I don't want you to freak out and think that, Robinhood is going to, if you have money with Robinhood, that you're going to lose all your money that's invested with them, because they do have the coverage, which is the SIPC insurance. This is very similar, like FDIC insurance, like that you'd have with the bank. Essentially, now this does not cover if you pick some bad stocks and you lose money and it's covered. This essentially covers the fact if Robinhood were to go under, your whatever you have there is protected. So if you have $10,000 worth of stock and Robinhood goes under, that $10,000 stock doesn't go away. That is protected. You'll be able to get that stock, transfer it to another brokerage firm. So I don't want you to think or be overly concerned about losing all your money, because you do have the SIPC protection that is there. That is on every major investment firm that exists. But once again, you got Robinhood paying out $65 million in SEC fines. You got them removing a lot of investment choices that you see that are pretty standard on most investment platforms. So I just have some concern on what is going on. I would like to see more information from the top people, the top executives of Robinhood, because that email and the FAQ they have on their site are lame. They're bogus. Like, there needs to be more there. So those are some of my concerns. Are you concerned with Robinhood? Do you have some fear if you have some money with them that something could happen? I'm curious to know what you think, what your thoughts are on this. If you enjoyed this video, if it was helpful, you know what to do. Like, subscribe, all that fun stuff. This is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Until next time, peace.